Hello and welcome to a new video of FMTTM Future of Finance. In today's video, we're going to be discussing how to invest in cryptocurrency. Before we get into the topic how to invest in cryptocurrency, I just want to take a moment to remind you that investing always carries some level of risk, and it's important to do your own research and consult with a financial professional before making any investment decisions. This video is for educational purposes only and is not intended to be investment advice. Now, I know what you're thinking: crypto? Isn't that thing that was all the rage in 2017 and then crashed and burned in 2018? Well, sort of. Cryptocurrency has certainly had its ups and downs, but it's still a viable investment option and one that's worth considering if you're looking to diversify your portfolio. And with more and more businesses starting to accept crypto as a form of payment, it's only going to become more mainstream. So, if you're a complete crypto novice and have no idea where to start, fear not. We're going to cover everything you need to know to get started in the world of crypto investing. First things first, what is cryptocurrency? Cryptocurrency is a digital asset that uses cryptography for secure financial transactions. It's decentralized, which means it's not controlled by any government or financial institution. The most well-known cryptocurrency is Bitcoin, but there are many others, including Ethereum, Litecoin, Polkadot and Dogecoin. Yes, that Dogecoin. Cryptocurrencies are stored in a digital wallet, which is a piece of software that allows you to send and receive crypto. You can think of your digital wallet as your own personal crypto bank account. So, how do you get started with crypto investing? First, you'll need to set up a digital wallet. There are many different options out there, so it's important to do your research and choose one that meets your needs. Some popular options include Coinbase, Blockchain, and Trezor. Once you have your digital wallet set up, you'll need to buy some crypto. You can do this on a cryptocurrency exchange, which is a platform that allows you to buy and sell crypto. Some popular exchanges include Binance, Kraken, and Bitstamp. When choosing an exchange, it's important to consider factors such as fees, security, and the variety of coins available. You'll also need to make sure the exchange is available in your country, as some exchanges have restrictions on who can use them. Once you've chosen an exchange, you'll need to set up an account and link it to your digital wallet. You can then use fiat currency, that's government-issued currency, like USD or EUR, to buy crypto. Some exchanges will allow you to use a credit or debit card, while others may require you to use a bank transfer. Now, here's where things get a little tricky: choosing which crypto to invest in. There are thousands of different cryptocurrencies out there, and it can be overwhelming to try and decide which one is the best option. First of all, it's important to diversify your portfolio by investing in a range of different coins. This will help to mitigate the impact of any single coin's performance on your overall investment. It's also a good idea to do your research and understand the technology behind the coin you're considering. Is it solving a real-world problem? Is it backed by a strong team? Is it widely adopted and used? These are all important factors to consider when evaluating a crypto investment. One thing to keep in mind is that the crypto market is highly volatile, and the value of coins can fluctuate wildly. This means that you could potentially make, or lose, a lot of money in a short period of time. It's important to be prepared for the possibility of losing money and only invest an amount that you're comfortable with. It's also a good idea to pay attention to the news and stay up to date on any developments in the crypto world. Changes in regulations, new product releases, and security breaches can all impact the value of cryptocurrencies. And finally, don't get caught up in the hype. Just because a coin is getting a lot of buzz doesn't necessarily mean it's a good investment. Do your own due diligence and don't blindly follow the crowd. So, there you have it. A beginner's guide to investing in cryptocurrency. It may seem intimidating at first, but with a little bit of research and caution, crypto can be a viable investment option. Now, let's dive a little deeper into some specific strategies for investing in crypto. One approach is to hold, which is crypto slang for holding onto your coins for the long term. This strategy involves buying a coin and holding onto it, even if the value goes down in the short term. The idea is that the value will eventually go up, and you'll be able to sell for a profit. This strategy can be a good option if you believe in the long-term potential of a particular coin and are willing to weather any short-term price fluctuations. Another strategy is day trading, which involves buying and selling coins on the same day in an effort to make a profit from short-term price movements. This can be a riskier approach, as it requires a lot of knowledge and experience to be successful. It's important to be well informed and able to make quick decisions when day trading. A third option is to invest in an ICO, or initial coin offering. An ICO is essentially a crowdfunding campaign for a new cryptocurrency. Investors can buy into the ICO and receive tokens in exchange, which can then be traded on the open market. This can be a risky strategy, as there have been many ICO scams in the past. It's important to do your due diligence and only invest in reputable ICOs. So, there you have it. A beginner's guide to investing in cryptocurrency, including some strategies for how to approach your investments. As with any investment, it's important to do your research and be aware of the risks. Cryptocurrency can be a volatile and unpredictable market, so it's important to only invest what you're comfortable with and to always be cautious. That being said, if you're willing to put in the time and effort to learn about crypto and make informed decisions, it can be a rewarding and potentially lucrative investment option. Now, let's talk about some advanced strategies for investing in crypto. One option is to use technical analysis to make investment decisions. Technical analysis involves studying charts and trends to try and predict future price movements. It can be a complex and highly specialized field, but it can be a useful tool for experienced investors. Another advanced strategy is to use arbitrage to take advantage of price differences between exchanges. Arbitrage involves buying a coin on one exchange and selling it on another exchange where the price is higher. This can be a challenging strategy, as it requires a lot of knowledge and experience, as well as the ability to quickly execute trades. It can also be risky, as the prices of cryptocurrencies can change rapidly and there is always the possibility of losing money. A third advanced strategy is to invest in cryptocurrency mining. Cryptocurrency mining involves using specialized computer hardware to solve complex mathematical problems in order to verify transactions and add them to the blockchain. Miners are rewarded with a small amount of the cryptocurrency for their efforts. This can be a risky investment, as the cost of the hardware and the electricity needed to run it can be expensive, and the value of the coins mined may not be sufficient to cover these costs. It's important to carefully consider the potential returns and risks before investing in cryptocurrency mining. So, there you have it. A beginner's guide to investing in cryptocurrency, including some advanced strategies for experienced investors. As with any investment, it's important to do your research, be aware of the risks, and only invest what you're comfortable with. Thanks for watching. If you found this video helpful, don't forget to like and subscribe to our channel. And if you have any questions or topics you'd like us to cover in the future, let us know in the comments.